Oh, good morning, ladies and gentlemen. We got a good one for you. We're going to talk about the earnings reports to watch for the week of January 18th. We're kicking it back off, baby. Earnings season's back in full swing. Really nice. We got a full week worth of great stuff, and we're going to go and do four of them today. I have four focus stocks, obviously, but we'll be talking about every company as we go through. One important thing to note, obviously, typically the first week of earnings tends to be a lot of the financials. So we had a start on last Friday in terms of financials, which you saw a really good performance. Now this week you'll have a lot more financials reporting as well as next week you'll see some more as well. So something to consider on that aspect. But here we go, starting with Monday. After close is Logitech. They're all the only ones really reporting that are worth note. And it's one of my focus stocks for a lot of reasons. Logitech is a company that is really at the forefront of beneficiality right now. So Logitech has been having a pretty freaking good year. I don't think there's any other way to put it. They've been on the beneficiary for many reasons. We talk about the new generation of work, as in work from home. Logitech's at the forefront of it because they provide really the majority of supplies for PCs, everything from webcams, which are mandatory right now for Zoom meetings, to mice, to USBs, to whatever you might need. Logitech's got it for you. So that's why they've been performing well. If you see their anticipated numbers here, they're expected an EPS of $1.02 compares to 84 cents a year ago. You're also expecting 1.23 billion in terms of dollar sales. I think that'll be a beat on a revenue perspective. And from an EPS perspective, I think that's a pretty decent estimate. I don't necessarily say if I'd see a beat on that aspect. I don't think they'll miss. I think it'll be pretty close to that $1.02 estimate. So be on the lookout for that. So that's Logitech for you. Expect some pretty good stuff there. Then we're already into Tuesday. Pretty easy stuff. Already into Tuesday as the financials start coming hot and heavy, baby. So here we go. What do we have Tuesday? We're starting with a little bit of Bank of America. So we're just judging this off of what we saw last week. We saw some good numbers on Friday. Bank of America, you should see a lot of recovery with these financials. You can throw Goldman Eat My Sacks in there as well, because they're kind of in the same boat. So you throw Goldman Eat My Sacks, even Charles Schwab in there. Come on now, nah. I'm kidding. Just put Goldman Eat My Sacks and Bank of America together for this conversation. You're gonna see recovery. It's gonna be pretty significant. So it's exciting stuff if you're in these financials, which have been schmammered, if really just schmammered last year. And we have Charles Schwab. I think there's been a lot of people getting into the investing game, and Charles Schwab probably saw a benefit from that. Yeah, I mean that's what I'm thinking. I don't personally use the platform, but maybe in the future. I like the platform though. I've looked at it and I do like the platform. We have Halliburton, Comerica. That's right, baby. State Street, Old National Bank, and Mercantile. So again, we talk about banks. After close, we have another focus stock. This is a really important one in Netflix. That's right, big tech starting us off. And what do we expect from Netflix? Well, they're expecting an EPS of $1.38 versus $1.03 of a year ago. I honestly do think they'll beat in that aspect. I think there's many reasons why. They have been spending a lot on content that is, well, let's be clear, frankly kind of garbage. But they have been spending on content, so I don't necessarily know what that looks like. But they haven't been really investing in the large shows that they're producing, so that might benefit their EPS. And trust me, it's a big issue with them. They aren't really producing many great originals right now, so they're expected a revenue of still $6.6 billion, which is a 21% sales growth, which is pretty significant growth. Obviously slowed down from what previous years are, but it's not unexpected because there comes a point where you can't keep growing at a 30% rate. It just doesn't work. It's hard to grow at that rate the larger your number gets, because you have to increase by that much more in terms of dollar amount. So I think it's a decent estimate. I do think, I mean, I hate to say they'll miss because it's hard to count against them. It really is. But I'm going to put a miss out there, and I might be wrong. I just think that they're really failing in terms of keeping their audience, while other streaming services are doing just that. Other places like HBO Max, Disney Plus announcing a lot of originals, while Netflix doesn't have as much going for them right now. All the other streaming services are kind of doing some good work. So that's my opinion on the matter. We'll take a look, obviously, and see, but I don't think they'll necessarily hit even that $6.6 billion, but they probably will. Come on now. We have JB Hunt, Zions Bank Corporation, banks, baby, Interactive Brokers. Again, they're in the same boat as a Charles Schwab. Again, they have a good platform, but now that all brokers have really turned to this free zero commissions model, I don't necessarily know what to expect there. But I think an overall benefit will be there because the market went up so much. People, typically when the market goes up, people are buying like crazy. It's just how it goes. And they're selling when it goes lower just because people are panicky and crazy. So you're going to see a lot of users, a lot of assets under management and Interactive Brokers, my assumption. United Community Banks, Pinnacle, FNB Corporation, Smart Financial Incorporated, and Fulton Financial Corporation as well. Look at all these corporations and Incorporated and all of this stuff. Wednesday, oh, that was a good freaking neck crack. Heck yes. Before open, we have Proctor Gamble. It is another one of my focus ones. That's right. I didn't have a financial on my focus, but guess what? I have Proctor Gamble. There's many reasons for Procter & Gamble. I mention it because we still see a massive push in terms of overall retail sales. Procter & Gamble benefits from that. Average EPS estimate of $1.51 versus $1.42 of a year ago. Pretty decent estimate. I think they'll beat. And an average estimate of revenue of 19.28 versus sales, which is a 5.7% growth. I suspect a beat on that aspect, close to a 6%. There's a few reasons for that. We did see lackluster retail sales in December, there's no doubt about it. But I think overall through the full quarter, you're going to see big benefit from October and November, where you saw massive increases in those areas. People stocking up on these products specifically. We're talking about soaps, we're talking about detergents, we're talking about laundry sanitizers, all this stuff. I mean, Procter & Gamble makes a consumer product, and consumers were buying products at incredible rates over this last quarter. So keep that in mind. Then we have United Health Group. Don't necessarily know what to say for them. Morgan Stanley, again, financials should piggyback off of the report we just saw Friday and do pretty decently. Fastenal, ASML, U.S. Bank Corp, BNY Mellon, Citizens Financials, BOK Financial Corporation, Commerce Bank Shares. Every bank made me, but my voice higher pitched. If you didn't understand what that was the bit. Hope you like that. But yeah, financials again, littering this thing. Financials littering the way. Wednesday before open, we have, or Wednesday after close, I should say. We have United. We've got Alcoa, Kinder Morgan, Discover. We finally get into one of the credit card companies. See how that looks. And again, consumer spending, pretty high. So I do think overall Discover probably see some decent numbers. I do. Plexus, Bright Scholar, Wintrust Financial, they're everywhere. Umpqua Bank. Umpqua. Kumquat Bank. Hancock and First Internet. They were the first ones to create the internet. Thursday before open, you have obviously the interesting one itself in fuel cell energy. I think that's one a lot of people follow for many reasons because, well, it's fuel cell energy. Somewhat of a meme stock back in the day. There's no denying, but has seen incredible growth this year, up 600%. Really in the last year. I think a lot of it's. I mean, there's a lot of reasons for it, but they're going to need to put up some good numbers to sustain that. I don't necessarily know if they. I don't think they will, but again, I think just the market's so confused right now on what they want to buy. It'll still stay up at the levels where it's at. We have Truist, Citrex, Union Pacific, Travelers Insurance. That's right. Don't know what to think about insurance companies right now. I just feel like they're performing as usual. Key Bank, Flagstar Bank, Baker Hughes, Northern Trust. That's right. Then after close, we have my last focus stock in Intel. Why Intel? But again, I mean, just announced the new processor. I mean, come on now. Intel's an exciting tech company. Expected an EPS of $1.10, I should say, versus $1.52 of a year ago. I think they'll beat our EPS standpoint. I think these are some low-balled estimates. Estimated to decrease sales 13.5%, with an average estimate of 17.48. These seem like some low-ball estimates, and I think they're going to beat, okay? I think they're going to beat. I don't know why they're being so rude here, but I really do. I still think they benefit a lot because of the purchase of new personal computers, such as laptops and just desktops for home offices and stuff like that. I mean, I think Intel as a whole benefits still. Not saying it's going to be a positive sales growth quarter, but I do think that's a little unfair, down 13.5. I don't think it's accurate. Then we have Intuitive Surgical, really interesting company, obviously. Kind of rough this year. This year has been kind of rough to them because, again, these elective surgeries have kind of been out the wayside as we're talking about hospitals with patients of simply just COVID. So you haven't been able to purchase, hospitals haven't been able to purchase these devices. But Intuitive Surgical, once we get back to some state of normalcy, they're going to be doing well. CSX, PPG, 4-Star, Reliant, People's United. You got Associated Bancorp, Bank OZK, and Seagate. Seagate one, obviously interesting as well. We talk about tech too. Most known for hard drives, but Seagate makes a lot of consumer electronics products. Pretty interesting company to follow. Should perform well over this last quarter. Friday we have Ally, more banks. We got Schlumberger, First Horizon, more banks, baby. New Oriental, Huntington. We've got Regions Bank again, First Hawaiian Bank, and Independent Bank Corp. I'm telling you, these banks are just loving life. Expect some good numbers. Financials can set the tone for the market doing well. So we need a good week here. So let's just hope for a good week. Look at the stocks I focused on, and we'll be talking about those, obviously. So overall, hope you have a great day.